Hello, welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of British Pound, Japanese Yen, GBP, JPY. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis, and do not forget to check out the forex analysis playlist on my YouTube channel for the analysis of other currency pairs. So let's get started. So this is the 4-hour chart of British Pound, Japanese Yen, and as you can see, I have already drawn two lines here. And if you have watched my previous video on the Pound Yen, then you know these lines pretty well. Because see, if you look at the chart, then you can see that market is forming higher lows here. Okay, market is forming highs. There is no doubt about it. But market is unable to cross the previous high, so as a result on the upside we have got higher lows. But when market came down and recovered from this particular price level, okay, and came down again, it did not break the previous low, rather it made lower highs here. So on the upside we have got higher lows where market was unable to cross the previous highs, and on the downside we have got lower highs where market is unable to cross the previous highs, so previous lows, or market is not crossing the previous low. And GBP JPY, Pound Yen, is one of the rare currency pairs that recovered sharply after the FOMC meeting, because we know it very well that before 3 weeks, when the FOMC meeting happened and the US dollar became very strong, currency pairs like Euro USD, Pound Yen shattered. Almost all the support levels were gone. But as soon as the market opened on Monday, okay, almost all the currency pairs that saw heavy selling pressure tried to recover, and Pound Yen is one of those currency pair that recovered sharply. And hardly we get to see this kind of market recovery, because see, after this kind of a sharp fall, just look at the recovery of the market. So this clearly tells us that though markets saw sell-off due to the news that dollar became strong, but overall the structure of this chart was not that weak. This market recovery clearly tells us, clearly gives us the signal that this chart is not weak. Try to understand the market psychology here. And here again we can see that whenever market is going down, it is not crossing the previous lows. So these are the factors that we must consider. Okay, these are the factors that we must understand, and we must try to understand the meaning behind it. And the meaning is that buyers are there in the market and they are very much bullish. You may think that this chart is going nowhere. Okay, you may think that this chart is having no direction right now, proper direction. But let me tell you, my dear friend, this chart is bullish. Buyers are present in the market and they are very much interested, and they are trying their best to take the price upward. And this kind of a chart pattern is called as symmetrical triangle pattern. Okay, this kind of chart patterns are called as symmetrical triangle pattern. And whenever you get a symmetrical triangle pattern, then there is an indication in the market that market will be going up, market is bullish, and market will cross this level. So if we follow the symmetrical triangle pattern, and if we follow the rules of symmetrical triangle pattern, then in this chart the best trading opportunity or the best buying opportunity is this level. When market will be crossing this level, then you'll get the best trading opportunity. On the other hand, you can see right now that market is trading in between these two lines, so you can always go for a buy here when market will be taking support and going up, just like market is doing right now. Okay. And if you want to short the market at this line, then I'll say that market has almost reached this narrow level. Therefore it will not it will be risky, or it will not be wise enough to short the market at a resistance. Rather wait for the market to cross this level so that you can go for buy opportunity. Or if you find market taking support at this trend line again, and if you see that market is going up again, then you can go for buy order. But always keep in mind that confirmation, yes, confirmation is always important, my dear friend, because this is market. There is no 100% guarantee in the market, because the big players, the big boys, they drive the direction of the market. Anything, your trade may go wrong, your 100% confidence may be shattered in minutes, in seconds. Therefore, always wait for the confirmation, and your confirmation will be in the form of hammer, price rejection from below, or a green candle like this. If you see price being rejected from below at this trend line, then you'll get the confirmation that yes, symmetrical triangle pattern is on, and you can go for buy order. Otherwise, do not buy. And considering the triangle pattern here, there is a possibility market will be crossing this level by today or tomorrow. Let's see how the price reacts, where the market goes. And if we look at the currency strength meter here, let's go to the daily chart. If you look at the currency strength meter here, then we can see that this is the British pound and this is the Japanese yen, and they are almost of the equal strength right now. They are almost standing equal right now. Okay. Therefore, there is a possibility that you may not see some heavy moves here, because whenever we see two currencies of the equal strength, market remains sideways. For a trending market, we need a strong currency and we need a weak currency. But right now we can see that both the currencies are of the equal strength. And if we go to the forex sentiment meter, for forex sentiment meter, you can go to my website avilashhajarika.com, and under the forex 101 section, forex 101 section, you will find the forex sentiment meter. In the forex sentiment meter, you can see that 72% traders, retail traders, are short right now, and only 27% retail traders have taken long position. And as we all know, more than 90% retail traders lose money, and they mostly lose money because they do not follow the proper direction of the market. You can find it internet, you can do your own research. You can do your own research on internet what the symmetrical triangle pattern tells us. It's a bullish pattern, and I have also tried to explain the reason behind it, because see, whenever you see a sharp recovery like this, obviously that's a clear-cut signal to us that buyers are there in the market, buyers are present in the market, they are trying their best to take the price upward. And you can clearly see that market is also forming lower highs here. So these conditions are clear-cut indication that market will be going up, or market is trying to go up now. So in this type of market, do not short the market, you may get trapped. And if we look at the forex volatility calculator, you can see that in the daily chart you can expect a movement of 47 pips, and in the 4 hours chart you can expect a movement of 18 pips only, because as I have already explained or shown you in the currency strength meter that both the currencies are of equal strength right now, and whenever you get two currencies of almost equal strength, there is not much movement in the market. But still, do not short the market here, do not join the league of the other retail traders. Okay. Just wait for the opportunity to go bullish right now, and for that market must cross this level or take support at this level. But right now market is not having some good movements here, but still do not short the market. Okay, just wait for the perfect opportunity only. So this is it. Hopefully you've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya tomorrow. Bye bye.